Good morning. A strong show by the IT majors ensured that the bulls had a good time in office. But the market breadth was quite neutral and the volumes were tepid once again. We might see the Nifty piercing 5,500 levels today, but the question is that will the market be able to sustain such an advance? Possibilities abound in the near term as we grapple with a timid global recovery and high inflation back home. The good news for India is that FII inflows have been quite positive and strong. Monsoons have also been good. The risk appetite is high amongst the global investors. Also, the government appears to be taking baby steps towards the key reforms. Central banks in the UK and European Union will take up interest rate review today. Friday's US jobs report will also be important. However, the currency movements have been quite volatile. Crude oil has climbed to $82 a barrel, which was earlier trading at $77 a barrel, and gold is hovering around $1,200. We see a flat to a slightly higher start. The key indices may accelerate as the day goes on, provided the global cues are supportive. Take a pause and decide which stocks are worth holding on to and which you can happily let go. Select stocks and sectors are driving the proceedings on local bourses as investors seek better returns amid rich valuations in large caps. The broad range for the Nifty remains intact at 5,300 to 5,600 levels. Any rise from here on will meet with periodic resistance along the way. Near-term support exists at around 5,420 to 5,430 levels. As far as the global markets are concerned, US stocks gained after encouraging reports on service sector growth and private hiring. European shares followed Wall Street as well. But Asian markets are trading mixed this morning, with China down marginally and Japan up. The results to be declared today are Anant Raj Industries, Ansal Housing, Aurobindo Pharma, Dreading Corp, SR Shipping, Man Infra, Oracle Financial, Varun Shipping and Zenotech Labs. FIIs were net buyers at Rs 6.88 billion in the cash segment on Wednesday, provisionally according to the NSE website. The local funds were net sellers of Rs 2.7 billion. In the F&O segment, they were net buyers at Rs 5.91 billion. On Tuesday, the FIIs were net buyers at Rs 6.77 billion in the cash segment, and mutual funds were net buyers at Rs 273 million on the same day. The other news for the day is state government opposes the draft constitutional amendment bill that gives the Union Finance Minister a veto power in matters relating to state GST. Union Ministry of Information Technology and Communication wants uniform tax soaps on all IT units. FDI declined by about 45% to $1.41 billion in June this year. Tea exports fell by around 15% to 12.7 million kg in June this year. Ministry of Heavy Industries and Public Enterprises has sought imposition of up to 14% custom duty on imports of power equipments. RBI issues draft proposal for credit protection on infra bonds. TCS is eyeing 2 contracts for strategic defense communication system worth 28 billion rupees. ONGC-led consortium of state-owned energy firms proves viability of 2.7 trillion cubic feet Mahanadi block. L&T bags orders worth Rs 10.25 billion for the construction of 2 hospitals, residential projects in Mumbai and a cement plant. Andhra Pradesh government awards approximately Rs 121 billion to Hyderabad Metro Rail project to L&T. Maruti Suzuki may manufacture cars for Volkswagen's global business on contract basis. Moving on to the recommendations, the technical calls are a buy on BASF. On the weekly chart, the stock is given a breakout on the upside from a rounding bottom formation. The stock has been on a well-entrenched downtrend from the peak of Rs 461 in January 2010 to a low of Rs 342 in April 2010. Since then, the stock has created a base around the levels of Rs 350 and bounced back from it on multiple occasions. On Wednesday, the stock gave a close above its key resistance levels of Rs 480. Keeping in mind the above-mentioned evidences, we recommend traders to buy the stock above levels of Rs 499 with stop loss at Rs 490 for a target price of Rs 525. And a buy on GE Shipping. GE Shipping has signaled a breakout from triangle pattern as prices closed above 304 rupees for 2 consecutive trading sessions. On daily candlestick chart, the stock has formed a bullish belt hold pattern on 2nd August and was followed with bullish breakout. Such back-to-back confirmation of position indicators is likely to ignite buying momentum with immediate target seen in the range of rupees 330. Oscillators like though have entered in slightly overbought zone, but momentum in the counter continues to remain upbeat. We advise buying the stock above levels of rupees 306.5 with a stop loss to be maintained at 300 for a target price of rupees 320. The derivative strategies are long ACC August future in the range of rupees 812 to 814 for a target price of rupees 840 and the stop loss is to be placed at rupees 798. And long HCC August future in the range of rupees 142 to rupees 143 for a target price of rupees 148 and a stop loss is to be placed at rupees 139. Thank you and have a great day ahead.